Hello and welcome. Today we will see how to use ProfitQube to calculate the break-even point in a multi-product business. I will then show a function of ProfitQube, often unknown or overlooked, that allows to improve the break-even point analysis with additional information. For those that are not familiar with ProfitQube, I suggest to watch my video, Transform Your Financial Analysis with My Integrated Excel Enterprise Model. You find the link here below. As usual, our analysis is related to a multi-business company which manufactures running shoe 1 and 2 in production division, buys and sells mountain shoe 1 and 2 in trade division, and deliver educational services 1 and 2 in services division. This breakdown will give us an appropriate mix of product for our break-even analysis. So the methodology adopted is the weighted average calculation, which accounts for the varying contribution margin of each product and ensures a more meaningful financial result. This approach is particularly useful in scenario analysis and forecasting, so you can adjust the product mix and see how it affects the break-even point. The business can anticipate the impact on market changes, product launches, or shifts in consumer preferences, leading to better financial strategies. Once the break-even calculated, we are going to apply the what-if analysis to these 4 scenarios. Scenario 1 is change unit selling price. So we will see how adjusting the selling price of your products influences your break-even point and overall profitability. Scenario 2 is change units sold. We will explore how different sales volumes across your product range can impact the break-even point and help you set realistic sales targets. Scenario number 3, change unit variable cost, where we will understand the effect of fluctuating variable costs on profitability and break-even analysis. And the last scenario, change fixed cost, we will discover how changes in fixed costs, such as rent or salaries, affect the break-even point and the financial stability. We are now in ProfitQube. Before analyzing the 4 scenarios, let's have a look to the break-even multi-product values. We go to function module 750 break-even point multi. In here, we can see the weighted average values breakdown by product and service, which allows the analysis of the contribution that each product or service gives to the company profitability. We can navigate between products and services with these buttons. So we have production products, trade products, and services. We get average selling price and variable cost plus fixed cost allocated as a percentage on total contribution margin. In the first columns, we have the units that byproducts we have to sell to get the break-even, and the total sales variable cost contribution margin. Here we have the weighted unit for each product and service, meaning average selling price, average variable cost, and average contribution margin. And finally, we can see the break-even adding the fixed cost allocated as a percentage on total contribution margin. So this is our break-even by product. Let's start now our what-if analysis. We go to break-even multiple product services function module, the 950. And here, the break-even point has already been calculated automatically by ProfitQube. These are the values related to our current situation for the 2018 here. We can change here, going back to our 750 function module and selecting here another period, another year. Let's go back to our analysis. So the first scenario we want to analyze is related to the change unit selling price. So with the given values in this scenario, we want to see how much should be the weighted average unit selling price to get the break-even. So we just hit the button on this scenario, and as you can see, it starts calculating the break-even point for this first scenario. So our weighted average unit selling price should be 18.99 to get the break-even. The second scenario is related to the change in units sold. That is already being calculated. As you can see, is 0. We will see why that we can use this second scenario to have a further different calculation. Let's proceed with the third scenario, where we change unit variable cost to get the break-even point with this given assumption. Let's hit this button. And so we should have weighted average unit variable cost of 9.26 to get the break-even. Let's do the last scenario, that is the change in fixed cost. This takes longer to be calculated. And this is the amount of fixed costs that we will have in this structure to get a break-even. Let's go back to this analysis of the change units sold. I now show the tab again, go to data, what if analysis, goal seek. So let's say, for instance, that we want to have a profit of 100,000. So in here, we set our target for the cell G19, that is this one, so the net profit and loss. And we want to get this 100,000 by changing the cell unit sold. Alright, so as you can see, that's another kind of analysis, very interesting, that we can apply in our different scenarios. I hope this demo of ProfitQube break-even point case was of interest for you. Please like, subscribe, share and comment with any financial issue, suggestion or questions you have for me. And stay tuned for next videos to watch how, with the help of ProfitQube, we will analyze other scenarios. You can find the link to download the free ProfitQube and ProfitQube consolidation versions here below, and how to get the 10% discount on full version. ProfitQube is available in 5 versions: Production Pro, Production, Trade, Services, and Consolidation. Download your ProfitQube today. Thank you for watching and see you soon.